I'm now going to demonstrate an example of selling a currency short, and the pound dollar is my example. I'm going to employ the same principle of using the trending indicators in 3 periods to trigger the sell signal to go short. As you can see, the pound dollar, as it traded on November the 1st, 2010 at 5:30 p.m. is my example. We have a live feed coming in from the ShareNet download service, and as a result we can examine and analyze the pound dollar in 3 different periods, and we have tiled them together so that we can see them at the same time. On the left we have the 10-minute period, in the middle the 15-minute period, and on the right the 60-minute period. And as we've shown before, we have 5 boxes in each. We do have a 6th box here in the 10-minute period, which I'll explain. But we have in the first box, in each of them, we have the price graph, then the cycle graph in box 2. In box 3 we have the overbought oversold indicator, 2 OBRS, and the very important trigger indicators, trending 36 in box 4, trending 55 in box 5, and in the 10-minute period I have added trending 21. It's a slow trending because it adds further confirmation to the signal. The first thing we do, as shown before, is to examine and focus on the trendings, which show the immediate trend. The trendings in all 3 speeds must move into the same zone, positive or negative, to point to the immediate direction of the currency in the 3 periods, and so trigger a signal. In this case we're looking at trending 36. Let's start on the 10-minute period. It is moved from the positive through 0 to negative, so its direction and its indication is negative. In trending 55, the same thing. It has gone from positive to negative, and it is here in the negative zone. And in trending 21, the same thing applies, also in the negative zone. If we look at the 15-minute period, we see the same thing. Trending 36 is in the negative zone, trending 55 in the negative zone, and in the 60-minute period, the same. Trending 36 in the negative zone, and trending 55 also in the negative zone. So as all 3 periods show the trendings with the same signal, the signal is to go short, providing the cycles and the true OBRS indicators are not going against the direction of the trendings. So let's have a look at the cycles and the overbought oversold indicator. What is very important is to examine the cycles first in the 10-minute period, and here we have the cycles in the 10-minute period, and we look at the future zone. What is it saying in the future zone? And it is pointing downwards, agreeing with the trendings. If we look at the cycles in the 15-minute period in the future zone, also from here to this point here, pointing downwards. And the same thing applies to the cycles in the 60-minute period. However, as I've said before, it is not absolutely essential for the cycles in the 60-minute period to agree with the direction of the trendings, or the area or the zone that the trendings are in. If we examine the overbought oversold indicator, the signal from the overbought oversold indicator should tell you that the price of the pound dollar is not in an oversold area, or it is at a 0 level. So if we look over here, it is below the 0, but way above the oversold level. If we look at the overbought oversold indicator in box 3 here in the 15-minute, it's at the 0 level. And if we look at the overbought oversold indicator in the 60-minute period, it is coming down from an overbought area, which is confirmation that the direction of the pound dollar is downwards. So everything is in order for the trader to go short. The indicators are pointing to this, and to find the level of the pound dollar that we will put on the trading platform, we employ the breakout technique, and we do this in the 10-minute period, and this is how we do it. We convert the price from closed line to candles over here, and these are candles over here. And the way we do breakout trading is we draw a support line here, which connects the bottoms of the price. Here we've drawn the support line with the trend line cursor, and the technique of breakout trading is that as the price penetrates the support line, we put the price one candle below the support line on the trading station as our entry point to go short. So the entry point was put on at 3:30 p.m. and the breakout was at 1.6045, and you can see that when this graph was taken, that it had already fallen to 1.6012 to give a 33 pips profit in 2 hours. This concludes the video showing you how to use the trending indicators supported by the other two cycles and OBOS to either go short or to go long on a currency for very quick profits.